Hello, folks. Good afternoon. It's great to be talking to you again. I had a little hiatus. Haven't talked to you in, I guess, about a week. And during that time, of course, a lot of things have happened. Yesterday was a big deal when we saw that the bank in Silicon Valley collapsed. And that, first of all, let me just say that was just terrible management. They bought 10-year treasuries and so forth. They bought them at the high price. And then, of course, when the Fed raised the rates, then the price of the bonds went down and they lost a lot of money. But that should never have happened. I would say, an anomaly. I can't say for certain it's never happened before, but that was just terrible management. And I think those folks are gone. The Fed is basically required to sell a bank when it gets in a situation like that. And the Treasury was all over the bank, yesterday, today, and so forth. They hadn't found a buyer as of this morning. And then they said they didn't think we'd have contagion, but we did see some contagion. We saw a bank in Manhattan, New York close. We saw a couple other regionals, and the big fear is that the regionals could be in a lot of trouble. I hope that we're not facing a meltdown like we did in '07, '08, and '09, and so forth. There is no guarantee. What do you do? The problem, of course, is the public oftentimes panics. And we saw long lines at a lot of banks taking money out. Now, if you do that, then basically you can force them into a situation much like the Silicon Valley Bank, okay? They can fail because of what we call contagion. So what do? Now, you know that the bank deposits, FDIC, are guaranteed up and insured up to $250,000. So you can feel good about that. The people in Silicon Valley had millions deposited, and I see that somehow we say we're not bailing them out. Somehow we are guaranteeing their deposits, way over 250. These are very influential people, and to say they're getting special treatment is to basically it's a minimal comment, because in reality they're getting a lot better, but a lot more than special treatment. So what do? Well, there's a couple, and I've made some notes here to share with you. You got to protect your money. You got to protect your money. Do you know that during the Great Recession and during the NASDAQ collapse, we sold a whole lot of these programs that we sell, the fixed index annuities, because people didn't want to lose any more money. And you don't have to lose any more money. You don't have to. The first thing that I would tell you is get out of the market. Have you seen the volatility? Way down yesterday, way up today, and then it leveled off. So this is the kind of thing you're going to see happen day to day, week to week. Has to happen. We're facing a downward slope. Things are not going to get better a lot as long as we're raising rates, because we're trying to control inflation. Now, they're speculating that the Fed will ease next week and won't raise the rates, okay, when the open committee meets. However, we don't know that. That's pure speculation, that the Fed will ease for a little while, delay, because they want to give the markets a chance to recover. We don't know that's going to happen. But we do know that inflation officially this morning was calculated at 6%. We know that the federal funds rate has got to get above that number, above 6%, in order to bring inflation down. Okay, now they want to bring inflation down to 2%. I don't know if that's achievable in the next couple of years. You'd have to collapse the economy, I think, in order to do that. How do you get inflation down anyway? You destroy demand. You get people to stop buying. How do you get them to stop buying? You get them unemployed. You take their jobs away from them. And that's what happens when the Fed rate goes up. All kinds of actions by employers, by large companies. You see layoffs everywhere. Everywhere you look around, you see layoffs. And that's just the big companies we see. But the small businesses are going to be hurt the most. And guess what else? This is a very serious situation for the poorer people and the middle class. We don't have the buying power. We're already got the inflation up to 6%, so we've already reduced our buying power. That inflation, as I've said many times before, is a tax. It's an absolutely tax. And it's a repressive It's a repressive. If we do anything that raises inflation, then what happens is the poorest people are hurt the worst, and the middle class more. Okay, we destroy jobs, we destroy their ability to buy. You see more signs at the corner with people holding them. You know, 2 kids, can't pay rent, can't buy food. You know those things. So that's where we are at, and we're not improving things, and we're not going to improve things probably as well as I can see it. You know, in the near future. So what do? How do we protect our money? Well, I've got a couple ideas. Okay, and there's a lot of simple things you can do to get your money out of the bank. You say, well, the lines are too long. What if you're online? If you're online and you have a savings account, move money from the checking account, whatever you can, into the savings account, and you can move the money from the savings account to another bank you feel better about if you want to do that. You can take the cash if you have a place to put it. Okay, so you have to think about all those kinds of things. Are other banks going to fail? Yes, other banks are going to fail, but we don't know who they are and how many. Okay, the more banks that fail, the worse the situation is going to be, and the worse the Fed will behave thereafter. So we got to find a way to protect our money. Getting as much as you can out of regional banks is probably a very good idea. The large banks, let's see, you got Bank of America, you got JP Morgan, Chase, okay, you got Wells Fargo, and you've got what used to be BB&T, which is now called Truist. You've got those banks that are very large. There's a few others that are second, in the mezzanine level, so to speak. And then you get the small regionals. The big four, big five are not going to fail. Why not? Because after the 8-9 Great Recession, they were forced by the Treasury to increase their reserves. They have to go through stress tests every year. Stress tests tell us how they will behave in another recession. If there's running the banks, if there's, different problems. So they are tested once a year. Now, the others, from my knowledge, are not tested in the same way. So they're not put under the scrutiny of the Treasury as closely as the large banks are. So the large banks have got the reserves. That's good because they can protect their depositors. But they only have, I'm told, about 10% of the depositors' money on hand at any moment. Okay? Now they can borrow from other banks, but the problem is the other banks are in the same situation. So while they're safe in the longer term because of their reserves, they may not have the cash on hand if we get a run on the bank. So those things are all hanging out there, and we'll have to see how those things go. What about the long term? What about the long term? What I'm going to tell you is, and what I've said, for now since 99, since 1999, I've been talking about the same solution, and I've actually helped $100 million worth of this solution for people that have come to me, okay? And that is, we put them in these retirement plans so that they can protect their money. The money is not vulnerable. It's not in the market. You cannot lose. They guarantee lifetime income. I've got a lot of folks that are retiring now, started out with me since 99, and now they're ready to retire, and they are retiring, and many have retired along the way with lifetime income. It's interesting. I've never had anybody complain about lifetime income. Never had that happen. I've never had anybody complain about pensions. These plans that we are talking about are sort of like a form of a private pension. In fact, pensions are based on the same kind of platform that these products are. So if you want safe money, come and see me. And I'd love to help you with all of that. Okay, right this minute, we have a product with a 32% bonus. 32% bonus. Some people are on the fence. Do I want to do it? Do I not want to do it? That kind of thing. And what I'm going to tell you is, come and see me. Let me explain to you how it works. If you're retiring and you've got a rollover, you got a 401k or anything like that, you don't have to put it all in these plans. Or you can put it all in these plans. You can do whatever you want to do. But I can show you how it works. I can show you how to protect your money and guarantee you lifetime income. I don't know what's better than lifetime income. I really don't know. And I really like to help you with that. So those are some ideas for you. And, that's a solution. The banks are not a solution today. The banks, we don't know what they're going to do. Are we teetering on another '07, '08, '09? We don't know. We don't know. So give me a call. You're going to see my telephone number on screen. My phone number is 410-902-0464. Let's talk about solutions. Let's do some good things for you, for your family, for your income. Let's get rid of anxiety and fear and all those overhanging, I wish I had done it kinds of things. I have clients that say to me, God, I wish I'd met you 5 years ago, or I wish I'd met you 10 years ago. And they also say, this is the best thing I ever did. Best thing I ever did. And now I'm retiring, and I'm not worrying about my retirement. Let's do that for you. Call me, 410-902-0464. Great to be with you. Talk to you soon.